Welcome back, friends. Until previously, we were discussing about the concepts of fund flow statement, its theoretical aspects, and various aspects that has to be considered while dealing with the application level questions relating to fund flow statement. And we have dealt in detail what are the steps that has to be followed while preparing a fund flow statement. And today we will be discussing about the actual fund flow statement question where you have to prepare and make necessary computations to find and prepare a fund flow statement. Next case. Balance sheet of P and Q as on certain specific date is given, and usually you will be given a date relating to two accounting period, that is, you may be given a date at the beginning of an year and of certain specific year, and at the same time you will be given another details of the statement relating to the beginning of the next second year. So the net effect of these two statement is in between these 2 years you will be getting the details of an accounting period of a certain company. So you may think that why we are doing like why we are doing like preparing two or analyzing two statements. Why can't we analyze a single statement? We can't do like that because from a single statement you will get a details, but it doesn't represent any change. By analyzing two statements of a concern, you can easily understand whether there exists any change in certain item. Then only you can understand or identify the flow of operations. That's why you are given two balance sheets. So there is a question is given, a balance sheet. Usually you may come across a question like this where balance sheet will be prepared like this, consisting of a balance sheet relating to two certain period, and remember the position of the date. Beginning has to be written first, followed by the next year. Next one, beginning, next year. Sometimes in question they may try to confuse you by bringing the second year first. So in that case you have to be very cautious, you have to correct it. You have to first consider the details of the beginning year, then followed by second year. Then only you can understand the change. If it is interchange, how you are going to find the change? So you have to be very cautious. In the examination, they may try to fool you. So you have to be very cautious. So apart from the details given here balance sheet is given. We all know in the balance sheet it is give details regarding current assets and current liabilities as well as fixed assets and fixed liabilities. And along with this balance sheet you will be given some additional information. That is the main part. You will be given some additional information regarding the operations of that business during the certain period. So this additional information play an integral part in the computation area. So you have to go through all aspects, not only the adjustment, you have to go through all the aspects very carefully. So first of all, you need to understand that you will be given a question where the details may be related to a company or it may be related to any partnership firm. So whenever it is related to a company as well as a partnership firm, some changes or some sort of peculiar methods are followed. If you go through this question here, balance sheet of P and Q is given here. So it's not a company. It might be a partnership firm or any sort of business. Anyway, it is not based on company. That's why here it is given combined capital. If it was a company, it will be given as equity share capital or preference share capital likewise. And why I am specifying like that? Because whenever it is related to a firm or a partnership firm like that, some sort of changes or some sort of additional computation has to be followed apart from the steps that are followed in a company question or company related question. Okay, then we will discuss that part subsequently. Just go through it. details of various items are given, and in the adjustment it is said that during the year a machine costing rupees 10,000, and in the bracket it is given accumulated depreciation 3,000 was sold 3,000 and was sold for rupees 5,000. So just go through the sentence. In the question it is said that during the year a machine costing 10,000. So machine costing 10,000 means it is the original cost of that machine. And in the bracket it is said that accumulated depreciation is 3,000. And bracket closed and was sold for 5,000. So that the sentence can be repeated like this. During the year machine costing 10,000 was sold for 5,000. A common man may think that the cost of machine was 10,000 and it was sold for 5,000. So there is a loss of 5,000. But never think like that. Because we are commerce students, so you have to be think in the accounting practice form. The original cost is 10,000. We all know our transactions are recorded in the certain books, and we usually record in certain methods and practices, and we always think about the sale or the profit or loss on certain transaction is done on the base of book value, not on the base of cost or original cost. So you can't think like that. But it is said that accumulated depreciation is 3,000. So the concept is like this. Original cost of the asset may be given. If you deduct book value, if you deduct the book value, you will get depreciation. So it can be think like that, or if you deduct depreciation from the original cost of the asset, you will get the book value. Here the cost is given 10,000 and the accumulated depreciation is given 3,000, that is 10,000, and here it is 3,000. Then you will get the book value. You have to remember that any profit or loss on the sale of asset is always computed on the base of book value and the sale price. Remember, it's a basic rule. You have to remember this rule. Always think that the profit or loss on the sale of any fixed asset is done on the base of book value and sale price. That is, whether it is profit or loss is done on the basis of comparing book value as well as sale price. If your book value is higher than the sale price, then it will be P. P means profit. If your book value is smaller than the sale price, sorry, if the book value is greater than sale price, then it is loss. L represent loss. And if the book value is smaller than the sales price, then it will be profit. That is the concept. So whenever you come across a question like this, where a certain details regarding a fixed asset is given, and at the same time accumulated depreciation or details regarding the sale is given, you have to think like that. So let's come to the adjustment. In the adjustment, it is said that the cost of machine is 10,000 and it is sold for 5,000. So you can't take the difference on the basis of these two amounts. In the question it is given that depreciation is 3,000. So here as per the question details given, the cost is given, depreciation is given. So you need to find the book value. So if you deduct the depreciation from original cost, you will get the book value. So once you get the book value, you can compare it with the sale price. So here it is given 10,000. So if you deduct 3,000 from 10,000, you will get the book value. So the book value as per the details will be 7,000. So a item costing 7,000 is sold for 5,000. So here the book value is 7,000 and sale price is 5,000. Book value is greater, so it is a loss on sale. That is how you have to deal with adjustment relating to the fixed asset sale. Next one, the provision for depreciation against machinery as on opening date 25,000 and another date closing date. It is considered as opening and closing dates. Two amounts are given. And remember, whenever any details regarding anything with opening and closing item is given, you have to compulsorily prepare the concerned non-current accounts. The basic rule is that whenever you come across any sort of additional information, you have to prepare account. Account means if you have the opening and closing balance or whatever additional information is given, you have to prepare. And here, provision for depreciation usually has to be given in that balance sheet because it is an adjustment that has been dealt during the period of computation. Instead of that, the information is given in the adjustment. It means this detail regarding the provision of depreciation is not recorded in the financial statements or the final accounts during the specific period. It may be prepared or it may be taken only after preparing this balance sheet. So this information is not affected here. So you have to prepare the account and subsequent adjustments that has to be followed. We will deal that part. After that, net profit for the year 2011 amount to rupees 45,000. And remember, usually net profit for the year may not be given in the question. Question means like an adjustment, an additional information in the adjustment area. It will not be given in the question. Usually it is given as a profit and loss account and its difference means two amounts may be given and on the basis of difference of those two amounts you may think that it will be the net profit during the year. Whenever the net profit is given in the adjustment, it is you have to remember that you have to prepare an account relating to net profit. Okay. At the beginning of the question, I had said that you may come across a question where one related to a partnership firm or a firms and another may be related to a company. So in here it was relating to a partnership firm, P&Q, not a limited concern, it's a business firm. Whenever you are dealing with a firm and when net profit is given in the adjustments, it means it is a partnership firm and the profit earned by the partners or profit earned within the business is belonging to partners. So net profit has to be adjusted in combined capital. So for that you have to prepare an account. Account means you have to prepare a combined capital account in which you have to make necessary adjustments regarding to this net profit amount. You may find it confusing because at the beginning we have been explaining many cases relating to the fund flow statement. Don't worry about it. We will be discussing about the same cases again and again and you will get familiarized with each case. Anyway, you have to consider all the points which we have discussed now. So the basic thing is, first of all, whenever you come across a question, make sure whether it is relating a partnership firm or a joint stock company. If it is relating to a partnership firm, you can easily find that you will see a combined capital here and usually in partnership firms only you will get any loan from certain persons. In case of a joint stock company, you will not see anything like this, Mr. A's loan like that. You will not see anything like that. Only in case of a firms or a partnership firm, you will see items like Mr. A's loan. These are some tips for identifying whether it is a case of partnership firm or not. Next one. Once you find a question like this, you need to identify whether it is a firm or a company. Then you have to go through the adjustments. In the adjustments, the concept is that you have to prepare non-current accounts. And what all non-current has to be prepared? Very simple. Just go through the adjustment. Whatever details is given in the adjustment. Any information that is relating to any item that is having an opening as well as closing balance, that particular item's account has to be prepared. This is the second important thing you have to remember. The rest we will discuss while going through the computation part. And apart from that, remember I have explained that part previously, preparation of provision for tax and proposed dividend. You will not see any sort of information regarding the provision for tax and proposed dividend. If you see a provision for tax or proposed dividend, usually you see these two items in the liability side. If you come across those two items, you have to compulsorily prepare the account for provision for tax and proposed dividend. We will discuss that part whenever you come across that type of question. So you have to prepare a fund flow statement. And we have learned that there are 4 steps in the preparation of fund flow statement. Let us begin with the first step. First one, schedule of changes in working capital. We all know this is the first and the foremost step. It is done to study whether there is an increase or decrease in working capital, and we all know working capital can be found out on the basis of current assets and current liabilities. So this particular statement is prepared to identify the schedule or statement of changes in working capital. It is called as schedule of changes in working capital, or can be called as statement of changes in working capital. And you all know what is the format for preparing. It will start with particulars followed by the year given in the question, that is the first year, followed by the second year. Remember the position of the years, it is very important. Followed by increase in working capital as well as decrease in working capital. You all know what is the rules for recording the increase in working capital as well as decrease in working capital. So as per the details given and how you are going to prepare schedule of changes, it is prepared on the basis of current assets and current liabilities given in the question. And remember, for preparing schedule of changes, you have to check only the balance sheet, because usually adjustments will not have any effect on schedule of changes, because usually adjustments may not be related to current assets or current liability. In that case, you need not have to worry about this adjustment, but it doesn't mean that you have to completely neglect the adjustment. Sometimes some adjustment may be given, but you need not have to worry about that. We will discuss that part. Usually adjustment part doesn't affect schedule of changes, but still there is one type of adjustment that will come relating to schedule of changes, that we will discuss in the coming sessions. So just go through the balance sheet. First of all, we will begin with current asset, because the equation for finding out the working capital change is current asset minus current liability. So we will begin with the current assets. So first one, current assets. So if you go through the question, first of all, you can see that first one, cash. In the beginning it is 10,000, in the end it is 7,000. So it has to be written like that. In the beginning 10,000 followed by 7,000. So if you go through it, you can see that there is a decrease in the value of the asset. Decrease in the value of the asset. Asset means cash. So whenever there is a decrease in the value of current asset, it is considered as a decrease in working capital. So the difference amount of 3,000 is shown in the decrease in working capital column. I hope you know what are the rules for preparing a schedule of changes. I am not repeating it again and again. Just go through the previous slides if you have any queries or clarifications. Next one, after cash, next item is debtors. So debtors, in the beginning it was 10,000 and in the end was 50,000. So there is an increase of rupees 20,000 in debtors. Whenever there is an increase in current asset, it is shown as an increase in working capital. Remember, you need to show only the difference in this amount in the subsequent columns. After debtors, the next current asset is stock. In the beginning 35,000 and in the end 25,000. 35,000, 25,000. So if you go through the item, you can see that there is a decrease in the value of the stock. So whenever there is a decrease in current asset, it is considered as a decrease in working capital. So the difference amount is shown here. So if you go through the question, you can see that we had almost recorded all the current assets. So you need to take the total. So total of current assets is, by adding first column, you will get 75,000. By adding second column, you will get 82,000. Remember, you need to add only these two columns, because these two, increase in working capital and decrease in working capital, it has to be dealt at the end. Until then, you have to record only the differences. After total current assets, next item you have to prepare is, or you have to note is, current liability side. In the current liabilities, there are only one item. So next one, current liability. And first one is creditors. In the beginning it is 48,000 and in the end is 44,000. So creditors 40,000 and 44,000. And if you see that there is a increase in the current liability during the year. So whenever there is an increase in current liability during the year, the difference amount is recorded in the decrease in working capital column. If you know the rules, you can understand the meaning of this computation. Since there are no other current assets details given in the question, you can now close the statement of changes in working capital. For that, since there is no other item, you can consider this item as the total of current liabilities. And next you need to find working capital. Working capital is current assets minus current liability. So difference is 75,000 minus 40,000, 35,000, and 82,000 minus 44,000, you got 38,000. And your answer is not complete. You have to balance this statement just like a ledger account. So if you go through it, you can see that there is an increase in working capital. Why? Because here you can see that increase in working capital column is 20,000. And if you go through the balances of or the amounts in decrease in working column, there is a shortage of rupees 3,000. So that amount is considered as an increase in working capital. It's very simple. If you just take the totals of these two sides, you can see that increase in working capital is higher and decrease in working capital is lower. So wherever the higher amount comes, that name has to be given. So this side is higher, so it is considered as increase in working capital, and the difference amount has to be shown in the shorter side. And if you go through this side, you can see that in the beginning it was 35,000, in the end it was 38,000. So difference amount is 3,000. If your computations are right, this amount and this amount will be same. Now you need to take the total. That total means 35,000 plus 3,000, 38,000. Here 38,000 we are recording directly. Here 20,000 we are recorded here. Again here 20,000. As I have told earlier, at the end of the schedule of changes in working capital, you have to balance this just like a ledger account. If your computations are right, this 3,000 and this 3,000 as per your computation will be the same. So this is how you have to prepare schedule of changes in working capital. Once you prepare schedule of changes in working capital, next you have to prepare fund from operation. For preparing fund from operation, you have to prepare some non-current accounts. As per the theory, we learned that second step was non-current account. That is correct. But for actually it is why we are preparing non-current accounts is only on the basis of non-current accounts you can prepare fund from operation. So how we are going to prepare non-current accounts? It is always done on the basis of additional information given in the question. So if you go through the question, you can see that there is a details regarding the sale or profit of relating to the loss or profit on the basis of sale of a certain asset, that is machinery. So first of all, you need to find whether it was a loss or a gain. In the question it is said that cost of machinery is 10,000 and accumulated depreciation was 3,000. So if you deduct 3,000 from 10,000, you will get the book value or the written down value of the particular asset 7,000. Only on the basis of this book value you need to check whether it is a profit or sale. And in the question it is said that it was sold for 5,000. You can see that there was a loss of 2,000. I hope we have dealt this area and you have understand the concept. So loss on sale is 2,000. Now what all accounts has to be prepared? In the beginning, in the adjustment, it was said that during the year, machine costing 10,000 was sold for 5,000. And provision for depreciation against machinery and details regarding the provision for depreciation regarding first year and in beginning as well as closing is given. And net profit for the year also given. So whatever items that can be linked on the basis of adjustment details given in the question, you have to prepare account. Here, first one, machine. So if you go through the balance sheet, you can see that there is an opening and closing for machine. So machine account has to be prepared. All these are various tricks or tips for doing the fund flow statement. Next one, accumulated depreciation. Here depreciation opening and closing balance is given. So you can have to prepare provision for depreciation account. And finally, net profit. As I have told earlier, net profit is, since it is a firm, partnership firm, and net profit is related to combined capital, so you have to prepare another account. So let us prepare accounts. First one, machinery account. We will begin with machinery account. In the question it is said that machinery opening balance, first of all you have to record this opening as well as closing balance. Opening balance is 80,000 and closing balance is 55,000. First of all, let us record those two amounts. 80,000 and 55,000. But in this case, a small computation is taken place. See, there is an amount of 20,000 is added with 80,000 and as well as 40,000 is added with 55,000. Why it is like that? If you go through the question, you can see that during the year a certain transaction relating to a machine is given, but followed by that there is a details regarding provision for depreciation against machinery is given. And in the question, that is in the adjustment, it is given its opening balance as well as closing balance. And in the beginning of the question, I have said that why it is this information is included in the additional information, because they might have not recorded the same situation while preparing this balance sheet. So the details regarding the machinery given in the balance sheet is not the exactly the actual figure after adjusting this depreciation. So in order to get that, you need to adjust this depreciation opening as well as closing amount with this machinery so as to find the exact position of machinery during the year. That is the concept. And the simple thing is that whenever you can see a depreciation provision in the adjustment like this opening as well as closing balances, you have to do like this. That is a simple trick. So first of all, we have recorded the opening balance as well as closing balance along with the provision for depreciation amounts, because since we have done that step, because the depreciation provision opening and closing was given in the adjustment side. That's why we have dealt like that. Otherwise, we would not have added these two amounts. After that, it is said that there was a sale of rupees 5,000. So there is a sale of an asset. So whenever there is a sale, you know how to record that in the particular ledger account. So I am not going into that. So the sale of asset is rupees 5,000. And whenever there is a sale, there will be profit as well as loss. In this case, there was loss. So if you go through the question, you can see that there was a loss, and we have done the computation part previously. So it has to be recorded. So loss on sale of asset or machinery, that is 2,000. And after that, in the question it is said that depreciation during the year is 3,000. So it has to be recorded, that is provision for depreciation 3,000. So once you recorded all these items, you have to balance this account. So you know how to take the balance of a ledger account. If you take the total, you can see that both the sides remains the same. And what if there comes a difference between these two sides? Remember, when there is a difference in this side, that is when credit side is more and debit side is less, it means there was a purchase happened during the year. We will discuss that part, and if you are getting a difference in this side, it is treated as a sec. We will discuss that part whenever such sort of adjustment cases come. So in this case, no other options. So you have completed the first non-current account. Next, you have to prepare is provision for depreciation, because the details regarding the opening and closing balance of provision is given. So first of all, provision for depreciation, and in the question for opening balance is given 25,000 and closing balance is given 40,000. So first of all, let us record those two amounts. Provision for depreciation, the opening balance has to be recorded in the credit side. Remember the sides of the various items relating to the nature of the heading. So provision for depreciation, opening balance is shown in the credit side, and the closing balance is shown in the debit side. And regard the remaining items, what all items has to be considered. Next one in the question, the details regarding depreciation is opening and closing, which we have recorded now. And the next information given is accumulated depreciation on machinery 3,000. And this provision is related to machinery, so this depreciation has to be recorded in the provision for depreciation. So next one, to machinery account 3,000. How did this entry come? Whenever you charge the depreciation on certain item, you will write an entry as provision for depreciation account debted to machinery. So the entry, when you post that specific journal entry in here, it will be recorded like this: to machinery account 3,000. And if you go through the question, you can see that no other information regarding the provision for depreciation or machinery is given in the question. So if you take the balance of this particular account, you will get a difference of rupees 18,000. So remember, whenever you get a difference of rupees, whatever the amount in this side, in this particular side, you have to give the name as by P&L account. And the meaning of that amount is by P&L account means you are setting aside an amount of rupees 18,000 as provision during the year. Sometimes the business may make provisions during the year. We all know what is meant by provision, and provision is taken or made on the base from profits during the year. So whenever you get a difference of a certain amount in this side, remember the sides which I have mentioned now. This side, it is noted as by P&L account. I hope you understand till now. So next you have to prepare is calculation of fund from operations. Fund from operation. We all know how to find fund from operation. It begins with net profit for the year. In the question, it is already given net profit 45,000. So we will begin with that. And after that, you have to add depreciation for the current year. Next one, loss on sale of machinery 2,000. And you will get the fund from operation during the year, that is 65,000. And how did we found 65,000? It is done on the basis of information that has been given in the question as well as on the basis of computation. And the basic concept for preparation of fund from operation is very simple. You just have to go through the accounts you have prepared and on the basis of details given in the balance sheet. If you just go through the question, you can see that first of all, if you before going into fund from operation, you just go through the items given in the question and familiarize the statement which you have learned for the fund from operation computation. In that case, you have learned that in the non-operating expenses, you will be recording general reserve, any intangible assets written off, any preliminary expenses written off, discount on issue of shares and debentures, dividend paid, commission paid, interim dividend paid. We have learned many items in that format. We are dealing with this question, and if you go through the balance sheet, can you find any of these items specified? No, nothing. We have dealt many items that comes under non-operating expenses, but none of the details is given in this balance sheet. And no other information regarding intangible assets also. So we have to leave this question, leave this balance sheet. Next, you have to go for accounts you have prepared, and what all items that has to be considered on the base of accounts. It is very simple. You just note down what all P and L items are coming. P and L items are coming, or all those items that has to be shown in the profit and loss account. First of all, machinery account. See, opening balance will not be taken in the profit and loss account. Sale of an asset will not be taken in the profit and loss account. Provision for depreciation, 3000, it will be taken. So remember, one item, provision for depreciation, 3000. Next one, profit and loss, that is loss on sale. It is already given profit and loss account. Loss on sale is always shown in the profit and loss account. So you have got another item, profit and loss, 2000. And closing balance you will not take. So on the base of this account, you have found two items. Next one, provision for depreciation. Here also opening balance and closing balance will not be considered. Next one, to machinery 3000. We already found that depreciation 3000. And finally, there is one more item, P and L account. I have mentioned that in the accounts you have to consider only P and L accounts or items that are recorded in the P and L. And remember, there is one thing. You can't record two amounts relating to one item. And what is the two amounts mentioned here? Earlier we found that there are two items in this account that has to be considered, that is provision for depreciation 3000 and P and L account rupees 2000. Here again in another account, provision for depreciation, there is another P and L account 18,000. How can we write this 18,000 relating to depreciation and at the same time 3,000 relating to depreciation? How we are going to write these two amounts under one head? You can't write like that. You can take only any one. So remember, whenever you are preparing an account means machinery account, any fixed asset account, and along with that, if you are recording any provision for depreciation relating to that fixed asset account, remember, you need not have to take the depreciation mentioned in the concerned fixed asset account. You have to take only the amount shown as P and L account in the provision for depreciation account. So, as per the computations, you have only two items. This 18,000 in this provision for depreciation account, and in here there is a loss on sale of asset P and L account. Only these two items. We will not consider this 3000. And you may think that previously we have learned depreciation on asset, this amount is taken. Okay, you will take this amount only when this provision for depreciation is not prepared. Sometimes you may come across a question where you need not have to prepare this provision for depreciation. In that case, you have to take this 3000. So whenever you are preparing provision for depreciation, in that case you have to take this P and L account balance. And at that time you need not take this provision for depreciation. I hope you may find it confusing, but you will get used to it when we deal with the similar pattern or adjustments in the computation. So you have two items, here a loss on sale of an asset and here a provision for depreciation. So the calculation of fund from operation, net profit, add depreciation for the current year 18,000 and loss on sale of machinery 2000. There are no other items relating to P and L, and there was no other items that I have mentioned in case of balance sheet in the given in the question. So you can say that fund from operation during the period is 65,000. I hope you understand the concept. So once you found the fund from operation, next you have to prepare fund flow statement for the year specified in the question. So as per the statement, first of all, you have to prepare a combined capital account. I have mentioned that part why we are preparing a combined capital account, because in this question net profit is given in the adjustment. So you have to prepare combined capital account, then only you have to prepare fund flow statement. So preparing the combined capital, it is an item in the liability side of the credit side. So it begins with an opening balance in the credit side and the closing balance in the debit side, and in the and the question adjustment it is said that net profit for the year is 45,000, so it is recorded in the credit side of the capital account. We all know the concept and rules for recording various items in the concerned ledger account. I am not going into that, because if I am going into that, we need more time for explaining that part. That all comes under the basics of accounting. So you have recorded opening balance, closing balance, and if net profit is recorded in the concerned side of the capital account, and if you go through the two sides of this account, you can see that there is a difference. This side is greater when compared to this side. So there is a difference of certain amount in the debit side of the combined capital. What will be that? In the debit side of combined capital, it means that there is a reduction in the capital of the concern. Since it is a partnership firm, the reduction in capital occurs mainly when one of the partners took away the money from the business for his personal use. Such takeaways are known as drawings. So there was an amount of 17,000 in the drawings. So that's why we have prepared combined capital. This is how you have to prepare non-current account. Usually non-current accounts is prepared on the base of details given in the adjustments or additional information. So now you have prepared almost all the non-current accounts. This is how you have to prepare. Once you have prepared the non-current accounts, you have to prepare fund from operation statement. We have already computed that part. Now you can go for fund flow statement, and I hope you understand how we have prepared fund from operation. It begins with 45,000, which is given in the question, and we have discussed that part. Next one, here the P&L account item, that is 2,000. Depreciation has to be taken, but I have explained that part in detail just now. So depreciation for the current year is 18,000, this amount, because in this case provision for depreciation is prepared. In the absence of provision for depreciation, you could have taken this 3,000. So next one, loss on sale of machinery 2,000, and finally fund from operation is 65,000. We have discussed this part earlier. Now you need to prepare a fund flow statement for the year specified in the question. It is otherwise known as statement of sources and application of fund. So let us begin with first item. First item is, here it is fund from operation is given. So before we go into fund from operation, remember, whenever you are preparing a fund flow statement for the year, how you are going to record all those items? We know that left hand side represents sources. All those transactions which led to the increase in cash balance can be recorded as source, and all those transactions which have led to the decrease in cash balance is considered application. It is quite easy to say, but in the examination you may find it confusing. What all items has to be taken? So remember, there is an order for doing this statement. First of all, just remember, we have prepared, or we began this question from the preparation of statement of changes in working capital. In that case, your result was about 3000 rupees as increase in working capital. We all know what is meant by increase in working capital. Increase in working capital is an application of fund. So let us enter that item in the application side. So first part is over. After preparing schedule of changes in working capital, you have gone for preparing certain non-current accounts. So before you go into that, here it is. First of all, we can easily write down the various items. Fund from operation, it is actually a source of fund, so it is recorded. So after that, you can go for the next item, combined capital. Here it is. This is an account that has been prepared as part of preparation of non-current accounts. Here, if you go through it, what item has to be taken? It's very simple. In the account part, you just go for any of the cash or bank items. It may be in the debit side or in the credit side. Here, in this combined capital account, here it is given 17,000 in the debit side. Debit side means certain amount has been gone from the business. Whenever there is amount gone or decrease in the business, it is considered as an application. So drawings is shown in the application side. Next, you have prepared a machinery account and also a provision for depreciation. Don't worry anything about it. Just go through the account and find out or sort out all those items which is termed as cash or bank. In the machinery account, you can see there is one bank item 5,000, and if you go through it, there are no other information. So sale of machinery 5,000 because it was a sale, so it is written in the sources side. And regarding next one, provision for depreciation. See if you can find any cash or bank items in this statement. No, nothing. No other information regarding cash or bank. So you need not have to worry about provision for depreciation account. So we have gone through schedule of changes, fund from operation, non-current accounts. And last but not the least, you have to go through the question. If you go through the question, just make sure any item you have left out. Let us begin with first side. Liability side, first one creditors. Creditors has been dealt in schedule of changes. So you need not have to worry about. Next one, Mr. A's loan. In the beginning it was 25,000. By the end it was 20,000. So it means, sorry, in the end there was nothing. See, in the beginning it was 20,000. In the end there was nothing. So it means that the company might have or company had repay back the loan to Mr. A. So when you repay an amount of loan, then there is a decrease in the cash balance. So it is considered as an application of fund. That's how you have to do like that. Here in the beginning it was 25,000. In the end there was nothing. So it is considered as an application of fund. So it is noted in here, repayment of Mr. A's loan 25,000. Next one, loan from bank. In the beginning it was 40,000. By the end it was 50,000. So it means that there is an increase in the loan. So whenever there is an increase in the loan, it means our cash balance is increased. So it is considered as a source. See, bank loan raised 10,000. Next one, combined capital. We already prepared that part, so you need not have to worry. You need not have to worry about anything that you have dealt earlier. Next one, cash. Cash is already shown in the schedule of changes in working capital. Debt is also shown in the first step. Stock has also been dealt in the first step. Next one, machinery. We have dealt this in the account part, so you need not have to worry about this machinery amount again. So neglect this machinery. Next one, land. We haven't prepared any account related to land, so you have to consider this amount. In the beginning it was 40,000. By the end it was 50,000. So it means there is an increase in the value of asset of rupees 10,000. So whenever the value of asset is increased, it is considered as a purchase. So purchase of land 10,000. And next also purchase of building. See, in the beginning it was 35,000. By the end it was 60,000. So there is an increase in the value of asset. Asset, when there is an increase in the asset, it means certain amount has been sent for purchasing the asset. So there is a decrease in the value of cash. So it is considered as an application. So it is shown in the right side. So now we have almost recorded all the items and transactions that are related to flow of fund or cash. So now you need to take the total of these two amounts. Usually if your computations and steps are correct, you will get a amount equal in both sides. That is, a tally amount will be ascertained. So this is how you have to prepare a fund flow statement. We have explained in many aspects, many steps and details regarding adjustments. Just go through all these steps. You may sometimes find it confusing in the beginning, but don't worry, we will discuss different cases, and when you come across different comprehensive problems, you will get familiar with all these adjustments. Remember the various steps and tips which you have to follow and kept in mind while dealing with preparation of fund flow statement. So just go through all these steps. We will discuss about further adjustments and the cases in the coming session. That's all for today. Thank you.